Hi guys, thanks for joining in. We're starting in just half a minute or so. Thanks for being here. One Royal Wolf, ni hao. How you doing? Um, just let me know how the audio is, and we'll get started very shortly. Thanks again for being here. Hello again, everyone. Welcome to another edition of Silver Bullion Television (SBTV). I'm your host, Patrick Vieira. Thanks again for being here. This is our live stream. Hopefully, everything goes well without any technical glitches. But again, thank you all for being here. Quick roll call. Sean McDonald, how you doing? Polynesian Pip, aloha. One Royal Wolf, how you doing? Um, Ilarici, okay, audio is good. Thank you, appreciate that. D. Tyler Dunbrack, first time I've seen your name here. Welcome aboard. Robert Charles, same. Welcome aboard. Appreciate you guys being here. Hope you all had a good weekend. Sunday evening in the States, early Monday morning Europe, and Monday morning here in Asia, just starting out the day, 9 o'clock here in Singapore this morning. So, again, thank you all for being here. Appreciate it. And if it is your first time here, please don't forget to subscribe, hit the bell to be notified on updates, and give us a thumbs up if you like what we do. We really do appreciate your support. And as always, you can find us on social media. Our website is silverbullion.com.sg, where we do specialize in systemic wealth protection, being the way things are right now in the world, whether it be whatever the Federal Reserve is doing, politics, geopolitics. Systemic wealth protection is something that we all have to understand right now. So give us a call or give us an email, and we'll help walk you through it if you have questions about what you may want to be doing. Silver Bullion SG is our handle on Facebook. Silver Bullion PL for Private Limited is our handle on Twitter. Audio versions, bit.ly, bit.ly/SBTV, iTunes, SBTV, Spotify for just, again, audio versions. And again, can't stress this enough. Do join our Crisis Tracker group. If you have the app Telegram, either on your mobile phone or on your desktop, do join our group, t.me and slash crisis tracker. T.me slash crisis tracker. This group, this is where we always keep people up to date with financial news, economic news, gold and silver news, and then it's things that we need to really take a deep, hard look at. So, crisis tracker group, I do hope that that you all join that group. So again, welcome aboard to everyone here. Seymour Rivers always be funding. Let's see. Uh, T Mac, got a question here already. I'm putting. Hmm, let me see. I'm putting my condo up for sale and will have a large amount of funds sitting in the bank while I buy cheaper rural home and renovated gold storage in Singapore for my spare funds. T Mac, I tell you what, couple advantages to that. Yes, I of course I do believe putting whatever you can into gold and silver is a good thing, but it's also the advantage of a jurisdiction like Singapore, because, for instance, our company is only owned um, and registered in Singapore. It means we only follow Singapore law. Some companies, when you go and you start to spread out and you get a bit bigger, you end up in different countries and you end up having multiple jurisdictions where one jurisdiction may have some type of influence over the other. And so I'm a big fan of one jurisdiction, one company registration in that jurisdiction, and not spreading out in various parts of the world. So it's a good question. That's my opinion. It's not financial advice or otherwise. So disclaimer there. That's just my opinion to it. So again, welcome aboard, Michael B, Brian Cook, Joel G. Okay, so appreciate you guys all being here. So upcoming guest on SBTV, we'll get to that segment. Upcoming guest, some guy named Peter Schiff. He's going to be a first time guest on SBTV. So let's hope he knows about gold, silver, and the economy. You just never know what you're going to get with first time guests, right? So let's hope he's up to it. Anyways, Peter Schiff, CEO of Euro Pacific Capital. Peter is one of a few widely known economists and investment professionals who have warned about the subprime mortgage crisis. He is a resolute opponent of debt fueled growth policies and is known for his advocacy for sound fiscal policies and, of course, gold. Peter is also a best selling author, having written 6 books, several of which are warning of a greater crash ahead. So we'll have Peter Schiff on coming up this week, and we'll see how it goes. You just never know what you're going to get with Peter. So first time around with Peter Schiff, so should be a good one. Always be fun. Yeah, thanks, Hugo Christian. Yeah, who's that, right? First time guest. Anyway, so with that, I want to go ahead and play our He Said What game, or in this case, it's going to be She Said What. This week's thank you is again going to be Aon Schmidt's book, Build Your Own Bank. We've been getting a lot of positive responses for this book. We knew it was a good book with good info, but the response from people has been pretty amazing, and we appreciate that. So we're going to be giving away this book again. Savers need a business plan. Simply keeping fiat currency in a savings account does not do the job anymore. Currency is printed rapidly and across the globe. It's no surprise that buying power diminishes constantly if measured against scarce and finite asset classes such as precious metals or cryptocurrencies. So we're going to be giving away this book again. Rules to the game: download the Kindle app from your phone or tablet's app store. That is free. Be the first to answer correctly in this live stream before the timer runs out. U.S. winners will be given a link to download the ebook, and winners outside the U.S. will be offered an alternative prize at our discretion. Provide us an email during this live stream, and with that, what will happen is my colleague Vincent is standing by, and what he'll do is he will mute or hide your email, so that way everyone here won't be sending you a hello unexpectedly. So with that, let's get going with our, in this case, She Said What. In the Lynette Zhang interview last week, where did Lynette say the newly created money goes to? Where did Lynette say newly created money goes to? Okay, so she spoke a little bit about when the Fed creates new money. It ends up, or it eventually, or it does go to a certain place that people will go ahead and use it. So anyway, let's see if any of you guys can get the answer. Got a little bit less than a minute left. If not, no worries. We're going to be probably offering a few more giveaways. Stock market, very, very close. One Royal Wolf, extremely close. Overseas, Seymour Rivers. There you go. Seymour Rivers, he's gotten it correct. The answer is Wall Street. Let me pull that up. Seymour Rivers, there you go. The answer is Wall Street. Seymour, second time winner. You're obviously watching the interviews. Thank you for that, Seymour Rivers. The answer is Wall Street. And just to confirm, here's what Lynette said.
The new money creation that the central banks are creating, generating, and then giving to the corporations. I mean, they're buying bonds, they're buying junk bonds, they're buying ETFs, they're buying mortgages, they're buying everything with this money that they push a button and they create. But all of that goes back to Wall Street.
Okay, so all of that goes back to Wall Street, just as Seymour said. Max Strong, 1%. You guys are awfully close. Bankers, 1%. Central banks, Polynesian Pip, Dark Pool, Hugo Christian, Base Money. You guys are on it. Everybody kind of circled up and surrounded it. Close, very, very close. But hey, no worries. If you didn't win, no worries. We're going to be looking at great comments from you folks during this live stream. Little bit of participation, and if we like it, we are going to be getting your email as well, and we'll be sending out up to 5 more of these Build Your Own Bank ebooks by Aon Schmidt. Again, it's a very good book, and I think it's more than ever very very timely because if you understand systemic wealth protection and you understand what's going on right now, then you understand you are going to need ways to not just be but to build your own bank. And again, it's a very very good, if not great, book. So again, thank you all for being here. What we'll do now is we'll head over to the Silver Bullion website, take a look at silver and gold prices right now. Okay, so it's our website, 75% off. Transfer in charges. So this is for guys who want to ship their silver and gold to us over in Singapore, to Silver Bullion over in Singapore. We're giving right now 75% off transfer in charges, and we now accept Swiss franc. Nickel parcels. Nickel's getting very interesting again because a lot of electric vehicle news is really starting to come up all over the place right now, and nickel is probably the biggest component as far as electric vehicle batteries go. So nickel is going to have a pretty good future and demand coming up. So US dollar, silver, 27. So we're back at that $27 range. I think you folks know we've been bouncing around between high 26, low 27. So we're back again at 27. Gold, 1954 an ounce. So still hanging around above that 1950 level. Would like to see it consistently be above 2000. And in fact, I think even Gerald Salente has said that once it can maintain that 2000 level, we should be looking at silver at 40. So we need that $2,000 level. And nickel, just under 15,000 a ton. It's been moving up since the beginning of the year. Investor kit. This is free. Once you're at our website, www.silverbullion.com.sg, you go ahead and click on this, and this here is it's a very good PDF on reasons why you should be investing in silver, and even why you should be looking at silver bullion. Storage, sign up for storage. You never know when you're going to need it. It is free to do, and there's no maintenance fees to create an account or to manage your account once you sign up. So absolutely free to do. And again, P2P, once you do sign up for an account with us and you have gold and silver in storage, you can use your gold and silver as collateral. You still own it. It's still yours. It should just use as collateral to obtain a secured low interest loan. So a lot of things happening here. Again, these are all things that will help with systemic wealth protection. And these are just a few reasons why we specialize in it. Silver gold ratio, low 70s again, 72.4. Would like to see it get back down to 69.70, but again, we'll see what happens. I know we're all waiting, or most of us are waiting for that silver slingshot to happen. Taking a look at Twitter, some things I bookmarked. I don't think it's going to be long before the pitchforks start coming out for sharpening. This is regarding Jerome Powell's recent FOMC statements, and we're going to be taking a look at that. But according to this article from National Review, it's time to rein in the Fed. Let's take a quick peek at that. Okay, we'll get that to load up. It's time to rein in the Fed. This is coming from nationalreview.com. I think a lot of people feel the same way here. At the Kansas City Federal Reserve's virtual Jackson Hole Economic Policy Symposium, Fed Chairman Jerome Powell drove a final stake into the legendary inflation fighter Paul Volcker's Fed. The new orthodoxy promises easy money as far as the eye can see and holds that inflation is good, not Venezuelan or Zimbabwean hyperinflation, of course, just a moderate dose, thus ensuring that a dollar every year is worth less, and Americans should be afraid. And that's pretty much the crux of the story, or the Fed wanting inflation. Do we want inflation? Just the first paragraph said, our dollar becomes worth less and less each year or over time, and I don't think that sits well with a lot of us, which is why it's always important to kind of know what the Fed is talking about, and more importantly, to digest what the Fed is saying, which we're going to take a look at shortly. But the other articles on Twitter that I want to take a look at: flood of gold from Switzerland to U.S. stopped in August. So let's take a quick peek at that also. So again, this is about the gold movement, which is important to us here. I know it's probably important to you as well. Swiss exports, this is from Reuters. Swiss exports of gold to the U.S. all but halted in August, while shipments to China and India rose. Customs data showed on Thursday, suggesting a big transfer of bullion to New York that followed the coronavirus outbreak has run its course. The pandemic upended the global gold trade, shutting the vast consumer markets of Asia while triggering a rush among Western investors to buy what they consider a safe financial asset. Prices of gold futures surged above prices in other parts of the world, incentivizing an unprecedented transfer of gold bars to New York. And this is where we saw that that big separation between the spot price or the futures price, I should say, over on COMEX, where there just wasn't enough gold to cover the positions. And so all of this gold had to make its way to New York, and things have kind of, I guess, as far as they're concerned, got back on track a bit. And now gold is able to go throughout the world again. But Switzerland, the world's biggest gold refining and transit center, shipped 412.9 tons of gold, worth $22 billion to the U.S. between March and July, but just 23 tons to China, Hong Kong, and India combined. Yeah, so basically, this is just again taking a look at the movement. Let me see if anything else is in there. Swiss exports to Turkey, where devaluing lira has spurred a surge of gold investment, were at 16.2 tons in August, the highest since July of 2017. So Turkey, we're seeing their currency starting to take a hit. People are moving into gold and silver. Looks like more gold though as being their store of wealth. So moving on. Randy Woodward, love is all around, but you rarely see it in the news because heroes don't advertise it. I'll just play this real clip. I think it's a little bit of good news that we all could use.
Good, are you? 14. Are you sure you don't have to do that? I really appreciate that. Thank you so much.
Okay, so basically, I think those are two things that we need a little bit of more of in the world. Just helping each other out and being able to say thank you. Those two very, very simple things can go a long way. Billionaire investor Ray Dalio on capitalism's crisis. The world is going. Let's take a quick peek at this article as well. The world is going to change in shocking ways in the next 5 years. I don't think anyone will argue that. We can all see already the way things are going, and it is going to shift. Where it's going to shift, how it's going to shift, it's still undecided, and hopefully we still have a choice to decide it. Veteran hedge fund manager says capitalists don't divide the economic pie well, so the system isn't working effectively for all. Ray Dalio certainly is no radical idealist, but in his frequent writings and media appearances, the veteran investor consistently calls for Americans to rewrite their long-standing contract with capitalism so that it is fairer and more generous to more people. Otherwise, he predicts life in the U.S. could become more difficult. Mountainous debt that stunts economic growth, fewer opportunities for ordinary citizens to get ahead financially, and the worldwide lack of trust in the U.S. dollar that diminishes Americans' purchasing power could lower their standard of living. And I think we all might agree with that. There's different ways that we may be looking at on how to make things better. But I think we all agree that something's got to change because the course things are headed on, it, we can do better. You know, everyone can do better, and I think no matter where you are in the world, we all can do better. So we need to again understand that we're all in the same boat together, and just as that gentleman did, offer help when you see help is needed, and don't be too ashamed to say thank you. Okay, so moving on, we'll take another look at more articles over on Twitter. 60% of businesses closures due to the coronavirus pandemic are now permanent, according to Yelp data. So, what Yelp was saying is that I believe this is pertaining more to restaurants, that 60% of these restaurants that shut down, they're not coming back. And this is something we talked about before, where, you know, there isn't going to be a V shaped recovery. These jobs that are gone, they're going to be replaced, if ever, if they even come back. And even if, you know, at the flip of a light switch, everything came back on, it's not, the economy is not instantly going to get back to where it was. These things are going to take time, and there are going to be changes that are made in that time. Dave Kranzler, my second silver purchase in the last 7 days after having not bought any since silver was in the 12 to 13 area. Why? Because silver is going a lot higher from here, and my fiat dollars become more worthless by the day. And we just touched on an article about that. We talk about systemic wealth protection. This is part of the reason why, where currencies are not going to be worth as much tomorrow as they were today. They're going to go down. They are going to go down. You need some type of wealth protection, some type of systemic wealth protection. And again, these are things that precious metals do. And I know this is something a lot of you out there already understand. Daniel DiMartino Booth, this is a good question for you guys too. Where are we headed among the four choices? Hyperinflation, stagflation, disinflation, or deflation? Curious to see what you guys have to say here, and maybe even offer a reason why. For me, I'm saying, well, she didn't put the choice of inflation. She just said hyperinflation. I think eventually we're going to get there, and that is because of all the money printing that's going on. So again, curious to see what you folks say. Where are we headed? Hyperinflation, stagflation, disinflation, or deflation? Let me take a look at some of the comments out here. Michael B, 2020 may look like child's play come 2021. Things are, yeah, we all need to straighten up and fly, right? We got to get back on track and do the best we can out there and make things better. That's for sure. Let me see what else is out there. Let's see. RR, I haven't seen you in a while. How you doing? The Fed's telling us they are destroying the dollar's purchasing power. That is true. That's exactly, for people who understand, that's what the Fed is indirectly saying. But if we understand that, we hear it very, very much, very, very much so, loud and clear. Take a look at a few more comments. Rolf Steiner, desperation. Not one of the four choices. Hyperinflation, stagflation, disinflation, deflation. Where do you think we're headed to? Hugo Christian, I see inflation right now. Absolutely. People are seeing it, but we're being told it's not quite at that 2% inflation target, but guys are seeing it. So kind of makes you wonder about that, right? But not one of the four choices either. Let's see. Pas de tes patates. We're already at stagflation, hyperinflation to come. Very well could be. There are guys that still say we haven't gone through that deflationary period yet. I kind of think we did, but maybe there's going to be another cycle to that deflation before it actually bounces up and hits the inflation, hyperinflation area. But we are surely going to see stagflation. That's for sure. I mean, all you need to do is look at Japan and see what's happening there with all the money printing. So let's see. JD Smith, combo of both. It'll be different areas of the economy will have a different inflation. You know, that's an interesting point. It may be different for different people for different areas. JD Smith, I like that. You know what? Let me get your name down here. And Vincent's out there. Vincent, maybe can we get JD's email and then we'll go ahead and send him the ebook, Build Your Own Bank by Aon Smith. So JD Smith. Okay, so Vincent, yeah, if you're out there, Vincent, I hope you are. If you can contact JD Smith, get his email from him, and we'll send him an ebook. Tony, Tony, Tony. All right, here we go. Revelations. Never know. Just never know. Okay. Okay. So you guys, a lot of different inflation answers. Confiscation, not inflation, but it still rhymes at least with inflation. Confiscation, Marxflation. I see everyone has some pretty strong opinions out there. RR, stagflation until the trust in governments catches on with the general public, then inflation in prices, ending with massive deflation. Well, you visited every country on the map there with that one. Okay, that's pretty interesting. It kind of falls in line with what JD said, where how he mentioned, maybe different types of inflations. So RR, I like that as well. I like that as well. We'll get your email and we'll send you a book as well. Aon Smith's Build Your Own Bank. So again, Vincent, if you're out there, hope you are. If we could get RR's email and send them a copy of that ebook. So a little bit more articles from Twitter. Thanks for you guys got some really great comments. Appreciate that. James Anderson, gold spoofing fun boy. Okay, this article I think you guys may have heard about already. It has to do with that spoofing that's been going on. Okay, it's on the second page here. So what happened is, according to Zero Hedge, and not just Zero Hedge for that matter, Deutsche Bank gold manipulator spoofing was so commonplace, I figured it was okay. So two breakdowns here. Spoofing, which was commonplace, that's one breakdown. And I figured it was okay. That's your second breakdown. You have an ethical breakdown all across the board, if not moral and ethical breakdown. So again, I think those two breakdowns are extremely significant, where people said, hey, it doesn't matter if it's not right, let's all do it. And some guy agrees to it. We got big problems when these things happen. So from the article, we first brought you the fascinating story of Deutsche Bank's gold spoofer David Liu back in June of 2017, when we revealed that the former precious metals trader turned government star informant was responsible for busting a massive ring of gold manipulators that resulted in numerous arrests and multi-million penalties paid by banks, including Deutsche Bank, UBS, and HSBC. So at least 3 banks there named. For those who need a refresher, read Deutsche Bank trader admits to rigging precious metals markets, in which we showed such internal chat board excerpts such as the following. UBS trader, and if you have stops, oh boy, haha, who you gonna call? Stop busters. Da-da-da. Okay, haha. It's basically just a game. It's just a game to them right now. The fixed dude, you guys were the silver market. You getting that? Were the silver market. And this is part of the problem, because silver is so small. The market is so small. It's very very easily influenced. Very easily influenced. So why you say that? Haha, on the fixes. Someone told you? Okay. Sorry, don't know what that is. Okay. You guys short some funky options. Well, you told me to, but I told you no one. You just said you sold on fix. We smashed it good. F word hell, UBS, now you make me regret not joining. By the way, keep it to yourself. Okay, so This is something it's long been said that there is manipulation going on. Silver market very, very easily influenced, and it's coming out. But you know, it coming out is just part of it because these are things a lot of us knew already. Unless there's a consequence to be paid, why should you? Why should you even worry about it, right? So curious to see some of your comments here. Let's see. Excuse me. Okay, sorry. Just let me. I'm scrolling through comments right now. Let's see. Okay. Patrick Gelke, first time I've seen you here. It's simple. Fiat will collapse against gold and silver will reverse the gold to silver ratio. That's a lot of guys hold that theory as well. When the currencies really do, where it's not hidden anymore, where currencies are in trouble, this whole systemic wealth, uh, this whole systemic wealth issue, when we see these currencies start to really um, parachute on the way down, and you're really going to see gold move, and gold will get to a point where a lot of people may not be able to buy it. Then they'll look at silver, and you are definitely going to, by then anyway, see that silver slingshot definitely move up. And even though maybe we missed that ratio, if we were looking to buy on that ratio where we saw silver at 120 plus to 1 ounce of gold, even though we missed the ratio, there's still that silver slingshot out there where percentage wise, silver will more than likely be that better investment than gold because it's going to move quite a bit more. And like I say, I really believe and call it the silver slingshot that's going to happen. More and more people are going to pile into silver. And as I just said, silver market is not a big market. It's very small. And that is going to push the price of silver much, much, much higher. So let me look at a few more comments out here that you folks have gone through. Let's see. Hang on. Sorry about that, guys. I'm just trying to go through comments here. Okay. Okay. Well, let me move on. I don't want to get stuck on that too much. Okay, so let me take another peek at a few more comments off of Twitter, and then we'll get into some things that Jerome Powell, some things that Jerome Powell said. So this is a pretty significant story, and I think more is definitely going to be unfolding in this story. So pay attention to it. Keep an eye on it. From Landlord Today, a rent freeze is quite simply another type of rent control. So what we're seeing is in the UK, they're looking at freezing rents, apparently. Raoul Paul. Well, another one bites the dust and folds. Bank of England is exploring negative rates. ECB, BOJ, BOE, RNZ, SMB. Eventually, it'll be the Fed too. But meanwhile, currency debasement wars clearly aren't dead. And again, systemic wealth protection. There is not going to be any one safe place unless you're in a neutral asset, such as gold, such as silver. So again, we're not a lot of us, we're not a shop just trying to sell gold and silver. We're more than that. But the thing also is we do see these things coming, and it's not just us. A whole lot of other people see it coming as well. And we'll touch on this shortly, this article here. Michael Leibowitz, interesting that Powell only mentions treasuries and mortgage-backed security purchases, not the other assets that they've been buying. Okay, that was also pretty interesting as well. Let me see if there's anything else out here. Okay, so I guess, I guess on Twitter we're okay here. Goldman, now's a good time to buy gold. Okay, so let's end it there with Twitter. So what I want to do now is get into a reaction from last week, or a revisit from last week, Lynette Zhang's interview where she said something that we're talking about here as far as inflation, hyperinflation. So I want to get your comments on these as well. So I want to revisit something Lynette Zhang said in our interview this past week.
I think the hyperinflation is going to come into play when people feel confident that they're going to get their 1,200 or 4,000 or however much they're going to do every month. And then they're going to feel comfortable to go out and spend that money. And then you'll just have a massive amount of liquidity, dollars in this country, and so, well, in your country too, chasing a finite amount of goods.
Okay, so that was Lynette Zhang, where she said inflation will come when people feel comfortable to spend. Completely agree with that. My question to you, though, is will we see PPP and unemployment relief rise and be more perhaps frequent to get people to be comfortable to spend? I said this before. I remember when a federal job I was working on, we were getting paid every Friday. And because you knew the frequency of your checks, every Friday you were getting paid, you had no problem spending your check over the weekend and then buckling down, going to work the next week, and then do your cycle over again. Friday comes, you head on out, you spend your money. So it's also the frequency. If you have the a velocity of a paycheck, let's say if your paycheck comes in every week, every 2 weeks, that helps as far as your spending of money because you know it's going to come in a bit more frequently. But or will it take government infrastructure projects, which we've talked about as well, with good wages to get people comfortable to spend? Meaning, if government opens up, they create some projects, you're hired, um, they hire contractors, you're hired by a contractor to do certain things, and these jobs are going to last years and years and years, and they're going to pay well. Would would that then cause also that inflation, hyperinflation? I do believe so as well. So what would get people comfortable enough? And that's the key. You got to be comfortable enough. Same as money is only good because you have confidence in it. You're only going to spend it if you're comfortable to spend it. So what do you think would get people comfortable enough to spend and get that velocity of money to get that inflation that the Fed is wanting? So let me take a look at some comments here. Um, okay. Let me just go through these, try and find some comments. Um, freedom by force. Hang on, let me get back to there. Freedom by force. Haven't heard of mining ratio. Excuse me. Everyone just acts like silver is everywhere. Um, yeah, if you talk to miners, and I'm not sure how they calculate this because it's different all over the world, but they tell you the ratio is 9 to 1 or 8 to 1. As far as for every ounce of gold that's mined, they're getting 8 to 9 ounces of silver. I'm not sure exactly how they're getting that number because I've spoken to some miners that says that tell me they're not even sure how they're getting that number, but generally that's what people say about when you get an ounce of gold, you're getting about 8 to 9 ounces of silver. And a point that was made was it also depends on the market. Now, even though the ratio is smaller, there has to be a demand. People need to want to buy silver. They need to know about silver. They need to know things about things like this mining ratio. So that's another good point as well. So let me go through and see these comments here. Um, okay, okay. Looking for more comments. T Mac. I learned from Mike Maloney's documentary, Hidden History of Money. We all did. We've all been through that school of Mike Maloney. That velocity was the key to inflation. I always thought it was just money printing. Yeah, that's a good point. I think it's actually a combination of the two. And a few weeks back, we recapped that Jim Rickards, Peter Schiff little debate about what causes inflation or what is inflation or the definition of inflation. But I think the two have to go hand in hand. I mean, you got to have that money printing going on. You need an excess amount of money relative to products. If you're not producing anything and the money supply keeps growing and growing and growing and growing, eventually all that money is going to compete for that finite or limited amount of products. That causes inflation only if people spend. So you do need that velocity of money part. And that's the thing. So apparently, the money's there. So it's either not getting to people or people don't have confidence to spend. It's one of the two. So that's a great comment there. In fact, T-Mac, what what we'll do is let me get your name down here as well. We'll get Vincent to get your email from you, and we'll go ahead and send you that ebook as well. Build Your Own Bank by Aon Smith. That's a good comment. I mean, I think we all been through Mike Maloney 101. He does nail a lot of the points home. So let me see. JD Smith, another great comment. Where have you been all this time? UBI is coming, Universal Basic Income. They have purposely stalled stimulus because the savings rate is too high and the system needs spending and capital allocation into the markets. Completely agree with that. Great statement. If you didn't win that book earlier, you would have won it now. So that's a great comment. Okay, so moving on, what I want to do is I want to take a look at the a few things Jerome Powell said last week at the FOMC meeting. FOMC week means we're going to take a look at what Jerome Powell had to say, and then we'll go over it, discuss some things, and I think it's going to get more interesting as we move on. So let's play one short clip from Jerome Powell.
Economic activity has picked up from its depressed second quarter level, when much of the economy was shut down to stem the spread of the virus. With the reopening of many businesses and factories and fewer people withdrawing from social interactions, household spending looks to have recovered about 3/4 of its earlier decline. Nonetheless, spending on services that typically require people to gather closely, including travel and hospitality, is still quite weak. The recovery in household spending also likely owes to federal stimulus payments and expanded unemployment benefits, which provided substantial and timely support to household incomes.
Okay, T-Mac, you're welcome. So the way I think most of us will read this is people are broke. You know, a lot of people are having some hard financial times right now. People are struggling. You know, the Fed can give or loan money. We know that they have the printing press. We know that. But they cannot act in doing anything unless Congress steps up in time and on time. So Powell pushed the ball back in the politicians' court. The question is, will they play politics with helping people, giving people relief, especially coming up during election time? Or are they just basically going to look at helping themselves to get votes? And, you know, let's just have faith, put some hope in this, that they will see the greater need of people and do what they're supposed to do, which is to serve the people. So we'll see how this unfolds. So let me take a look at some comments. Let's see. Rolf Steiner. Hang on. Let me get your comment here. Rolf Steiner. Even when you're given free digital units to spend, they will control your use of them, be able to cut you off from them, and even make them expire, time limits, to make you spend them and where they are. You know, Rolf, I'm not sure where this is coming from, the context it's from, but it sounds like negative interest rates to me, or it sounds even like if you end up going cashless and then the monetary policy is a negative rate policy, that will exactly get you to do those things. You are going to have to spend your money, otherwise you're going to watch it become less and less in your bank account. So I'm not sure the context of it, but it does fit in that context. So I'm just curious if that's what you are referring to. Okay, so moving on, I want to go to another clip from Jerome Powell.
Activity in the housing sector has returned to its level at the beginning of the year, and we are starting to see signs of an improvement in business investment. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up since our June summary of economic projections. Even so, overall activity remains well below its level before the pandemic, and the path ahead remains highly uncertain. In the labor market, roughly half of the 22 million jobs that were lost in March and April have been regained as many people return to work.
Okay. Gio, got it. Thanks for bringing that up. Got it now. Okay. So according to Powell, housing picked up. And we know this because the past few weeks we have been saying how people are moving out of the bigger cities and moving into suburbs or away from big cities at least. So we know that it's because people are buying homes outside of big cities. Improvement in business investment. Well, the Fed has pumped up the markets so much that people feel assured that the markets can never go down. Hey, the Fed's got your back. So, in my opinion, that's why you're seeing improvement in business investment. I mean, it could also be on the flip side where businesses are investing in maybe land or whatever else it may be. But the point being, the Fed has really injected money into the markets, and that's why, in my opinion, we're seeing business investments. Um, the other parts, half of jobs lost in March and April have returned. The thing is, we're in September. Okay, we're in September. Why only report on those 2 months? Could be maybe they only got the data for those 2 months, but he does go on to say the path remains highly uncertain. Okay. Now I want to show you another central bank that used the words uncertain. The words were unusually uncertain. And I find this pretty significant because central banks, they might play different instruments, but they do sing the same song. So I want to show you this article here from CNBC where the Bank of England warns of unusually uncertain outlook, reveals negative rates under consideration. And we've been hearing this for a while. So let me just read through the bullet points here. After plunging a record 20.4% in the second quarter to officially enter recession, the UK economy saw signs of recovery. There's that word again. With a 6.6% monthly expansion in July. Bank of England expects third quarter GDP to be 7% lower than in the fourth quarter of 2019. Despite stronger than expected domestic economic data in recent months, the central bank said the economic outlook remains unusually uncertain. Therefore, Bank of England revealed that the MPC had been briefed on the bank's plans to explore how a negative bank rate could be implemented effectively, meaning it is now openly considering how to use negative interest rates. Okay, so those words, unusually uncertain for the ECB, means they are openly exploring negative interest rates. Is Powell signaling this without exactly saying it? That word uncertain basically means we don't know what's ahead, but we're not taking anything off the table. And you don't hear him ever say negative rates, but I mean, you would have to imagine that, if worst comes to worst, or even if maybe that's their plan that they're not talking about, it has to be somewhere in the cards or on the table. Let's take a look at something else Powell said.
In turn, well-anchored inflation expectations enhance our ability to meet both our employment and inflation objectives, particularly in the new normal, in which interest rates are closer to their effective lower bound, even in good times. Hence, as we say in our statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these outcomes, including maximum employment, are achieved. With regard to interest rates, we now indicate that we expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessments of maximum employment, and inflation has risen to 2%, and is on track to moderately exceed 2% for some time. In addition, over coming months, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace. These asset purchases are intended to sustain smooth market functioning and help foster accommodative financial conditions, thereby supporting the flow of credit to households and businesses. We believe the strong policy guidance we are providing today will serve the economy well by promoting our goals through the many possible paths the recovery may take.
Okay, so in summary, rates will remain unchanged. I think we have guys who are saying already it's out until 2023. He used the word the new normal. New normal will be low rates, even in good times, while they strive to get inflation. The fallout from his speech varied even from within the Fed. And what I mean by that is there's something that Neil Kashkari said. I think he's a Fed governor or one. He holds one of those titles. And I'll play a clip from a Peter Schiff interview where he mentioned Kashkari, but I just want to go ahead and see some of your comments. Um, low zero to low interest rates until 2023. I think that's pretty significant because zero to low interest rates it does it's going to do things. It's going to encourage more risk taking. Um, so we'll touch on that also a bit later. But anyway, always be funding. Does he even believe what he's saying? And that's a good question because if we go back to just about a year ago, when the repo market broke, what Powell said was it was something along the lines of corporate having to pay taxes, so they need to get their funds together or whatever it was, and it just simply was not true, or if it was true, it was just very very minimally true compared to what was really happening. So again, I'm just you guys have all got a lot of good opinions out there, so I'm just kind of scrolling through them right now. But anyway, I want to go to what he what sorry something Neil Kashkari said and then something Peter Schiff picked up on. So I just want to go ahead and play that clip for you.
Kashkari wants a more definitive statement that, like, we're not going to raise rates no matter what. But, in his article that he wrote, kind of saying that the Fed's commitment to not raise rates wasn't strong enough. What he did say, though, was that, if we are surprised by an unexpected heating up of inflation, he said, well, that's an easy problem for the Fed to solve. Oh, really? A unexpected heating up of inflation is an easy problem to solve? How exactly is the Fed going to solve an unexpected heating up of inflation? Well, it only has one tool, right? Monetary policy. All it can do is raise interest rates.
Okay, so raising interest rates, that was something that Paul Volcker had to do back in the 70s when we seen inflation take off. So Neil Kashkari is saying the Fed did not give a strong enough message. So what should the Fed have said? Zero interest rates forever or let's go negative? Could you imagine the fallout then? You got to wonder why he says these things. Sometimes is there a little bit of a motive behind it? But if you think about it, why was the Fed always trying to reach that 4, 5, 6% interest rate? It was so that they have enough of a runway so that if a recession does come into play, they have enough again runway because recessions typically you need to lower interest rates 4 to 5% or so to be able to bounce back from recession. So that's why the Fed was always trying to hit that 4 or 5% target, but they couldn't. They only got up to about 2.25%. Which means if you need that 4% runway again, you're going into negative territory. So, but let's think in reverse a little bit. Think in reverse. Kashkari says unexpected inflation. Now, we saw Paul Volcker raise rates, or the Fed funds rate anyway, to I think it was about 20% or so to fight off inflation back in the 70s. Now, just as a thought experiment, considering how much money is in the system today, back then, Volcker might have had to easily double or triple that interest rate. And I'm being conservative now. Could you imagine Volcker or any Fed chair coming out and saying, I'm raising interest rates to 40, 60, 80, 100% to stave off inflation? It's unheard of, right? Unless you look at other countries, Zimbabwe, things like that, right? Weimar Republic. That's possibly where we're at or headed to. It's unheard of. It can't even be imagined. But again, this is just a thought experiment, though could indeed be a reality one day. The Fed at this point does seem to be all smoke and mirrors. And I just want to pull up one more article for you guys. But could you imagine that if Volcker came out and said, or any Fed chair came out and said, we're going to have to go 50, 60, 80%. Unimaginable. From Market Watch, stock markets have now seen the peak of Fed stimulus unless these two things happen. So, have we seen the peak of Fed stimulus unless these two things happen? Investors were left disappointed by the Federal Reserve's action or lack of late Wednesday as the central bank failed to indicate any new stimulus. The Fed said it planned to hold interest rates at nearly zero until the end of 2023 at the earliest, as Chairman Jerome Powell gave a cautious outlook. Lena Komileva, a chief economist at G Plus Economics, sorry if I got that name wrong, said markets have now seen the peak of Fed stimulus, barring a government error. Government would never make an error, right? Or market shock. Okay. So the Fed's new inflation framework has not led to a new policy regime or fresh action, but to a flatter policy cycle that still provides greater reflationary stimulus against the economy's adjustment to a new with COVID normal, she said. I like this word here, where she's talking about reflationary stimulus. Okay, so let's keep that in mind. This reinforces our view that barring a new exogenous shock to the economy or a fiscal policy error failing to bring fresh support to the recovery, it's that word again, recovery, beyond the November elections, markets have seen the peak of Fed stimulus. So this is according to Miss, let me get her name again, Miss Komileva. Okay, well, we'll see how that happens. And I'm going to take a look at something Robert Kiyosaki had to say. He had a 5 or 6 minute clip, which I broken down into 1 minute clips, so we can really have a good talk about it. But if we're at the peak, I'm not so sure about that. Not so sure about that at all. Let's see. Okay, so comments. I think you guys are okay. Let me go into something Kiyosaki said. Robert Kiyosaki. Gotta warn you though, he's very it's controversial. Some guys just watch it because he's telling the truth, and sometimes the truth isn't always an easy thing to take in. So Robert Kiyosaki.
We're already finished. I hate to say this, but I think it's the end of the American empire. Our Federal Reserve Bank, our Treasury, and our government has messed up the US dollar so much that they have to find a way to keep people happy. The stimulus money they print, everybody says, oh God, it's because of they shut the economy down and this and that. Everybody says, yeah, so they're going to give me PPP and all of this stuff. So just remember this, that money comes from production. And when we pay people not to produce, which is PPP and all that, we're just paying them not to revolt. And that's what happened during the Roman times. And so that's why I say it's the end of the American empire, because our money is corrupt.
Okay, Robert Kiyosaki. Are central banks throughout the world taking care of us through things like PPP so we don't revolt? Is our money corrupt? No matter where you are, and if you're watching this, is your money corrupt? Is it doing any better? Is it backed by anything? Is it sound, honest money, or is it money because the powers that be will have you think it's money? So I just want to get to one comment here. Carrie Ellen Wilder. Every aberration of monetary policy can occur, absolutely, when you are dealing with counterfeited, irredeemable fiat paper promises as money. We will see monetary perversions never before thought of. Carrie Ellen Wilder, I like that comment. I think it's a great comment. We'd like to also give you that book, Build Your Own Bank, as well. So Vincent, if you're out there still, Carrie Ellen Wilder. If we could go ahead and get her email address, and we'll give her that book. Carrie Ellen, that comment, it absolutely falls into, again, systemic wealth protection. We don't know what they're going to do, but we do know how it's going to end up. And so you're absolutely spot on with that, where we just may see perversions that we've never seen before. It's a great comment. So again, getting back to Kiyosaki, our central banks throughout the world taking care of us, getting us to not revolt, or they as they say here, trying to keep some rice in our rice bowl, so we have just enough to stay fed. Again, not to revolt. So those things are pretty profound, what he had to say. And again, sometimes the truth can be a bit disturbing, and he's speaking some truth there. So I want to play another clip from Robert Kiyosaki.
Now, would I take the money? Absolutely. We're talking about it. Don't fight the government. Don't fight the Fed. Don't fight politics. If they're going to give me $1,000, I'll take it, but I would convert it into either gold, silver, or Bitcoin. So now it's all coming apart at the seams. So gold, silver, Bitcoin, they're not the answer, but they're kind of an insurance policy against the incompetence of our leaders. The more the government pay, and this is globally, it's not just the US, or it's not a racial thing. They're just paying everybody not to work today because the monetary system is coming apart. But you've got to be smarter than the government, which is not that hard to do.
Okay, so globally, system is falling apart. Again, can't say this enough. Systemic wealth protection, we've got to understand that. System's falling apart. Gold, silver, and Bitcoin are your insurance for this corruption, is what Kiyosaki's been saying, and it's also something that we've been saying for a while. Now, again, this is not financial advice, professional or otherwise. This is just our opinion on what we can do to do things like build our own bank, and to do things to protect ourselves against systemic wealth protection. Now, we have been saying that these financial currency instruments, they are going to be important. Have cash outside of banks. Maybe, don't keep all of it in the bank, but have some outside of the bank. Though, keep in mind, cash has an expiration date. And I think we all know this and understand this. Cash has an expiration date. And with the actions of the Fed and central banks, expiration date is getting closer and closer. Sure looks like it anyway. Have junk silver. Why? Because when things fall apart, people will first recognize junk silver as money. And the reason, because junk silver has silver content in it. In some places, 70% silver, some places 90% silver, some places 92.5% silver. So when I say junk silver, I'm not just referring to U.S. junk silver. I'm talking to every country out there that once upon a time had silver in their coin. So if you can obtain some of that, maybe a good idea, because when things do really go bad, that coin is going to be, in my opinion, one of the first things that people recognize as being money, because it was money and it's not just a piece of paper. It has silver in it. Next, have gold and silver. After junk silver, people understand it, then they're going to understand gold and silver. This is money. It's money all over the world. All over the world, it's a store of wealth. And again, we know it to be money. So you definitely want that silver and gold bullion, bars, and coins. Then we come into Bitcoin. Gold and silver, they're not easily transferable for payment. Bitcoin, it may not be widely understood, but it's widely known. And people, my opinion, they're going to also gravitate towards something like Bitcoin. We may not agree with it, but in this case, it's, again, money is about confidence. So if people have confidence in a crypto, that's what people have confidence in. But for me, the combination of both is Cash Gold Token. And again, I have to disclose this. I am close to the token. I do have a micro share in Cash Gold Token, or CGT. And the thing is, this token is not just gold backed. And I like to say this, the token is fronted by gold. Okay. And One token equals 1 gram of gold. It's redeemable in fiat, Bitcoin, or other crypto on exchanges if you trade it, and of course redeemable in gold. A lot of gold-backed tokens, it's only redeemable in some cases 400-ounce gold bars, which means for most of us, we're never going to be able to redeem that. So that's something to consider as well. But the gold can be redeemed in various places with Cash Gold Token (CGT). Can be redeemed in various places throughout the world, which essentially makes the gold borderless. And this is important if in case you need to get on the move. So the gold that fronts CGT, and again, I'm using the word front, is already in storage. Okay. And this is a huge difference. It's already there. It's not gold like other tokens that comes from future production at the mint or comes from future production from mines. It's already there. With Cash Gold Token, the gold is already there. And this is also important because when we saw the supply of gold get a little bit harder to get, can you imagine if you had a gold backed token back then and you wanted to redeem it for gold, would you have gotten it so easily? Maybe not. But this is the difference with Cash Gold Token. The gold is already there in front of the token, and that's a big difference. So anyway, this is important. Sorry about this, guys, but it is important. And if you are interested and want to know more about Cash Gold Token or CGT, send an email to contact@cash.gold. The website is also cash.gold, or give us a call. Area code 65 for Singapore, 6741-1631, and you'll talk to a real person. It's not an AI chat box or anything else. You're going to talk to a real person. So anyway, thank you for letting me bring this out. It is important. And again, Cash Gold Token, the gold is already there. It's not future production, which you don't know if you're going to get. It's already there. And again, distributed in various places throughout the world. So moving on, Kiyosaki, another Kiyosaki clip.
It's just coming apart right now. And when the Fed talks about stimulus checks, well, the only people that get rich are Bezos and Zuckerberg. They get all that money for free. It goes into them via BlackRock, a hedge fund, and it goes straight into Wall Street. And then the guys who own Facebook and Amazon get richer. It's always been socialism, but they don't tell you that. The Federal Reserve Bank is a socialist or a communist organization, but they'll never tell you that. The more I studied, the more I felt I needed a shower. They were just lying to us. When the market crashed in 2020, March of 2020, only 16% of the teachers, firefighters, and police officers' pension was funded, 16%. So they had $16 for every 100 they owed. Now it's down to 6. They're broke.
Pretty strong words. Excuse me. Pretty strong words from Robert Kiyosaki again. The Fed, as we and many other people are saying, is deciding the winners. They're deciding the winners and losers right now. Corporate is getting bailed out, though not all. So while the Fed is keeping Wall Street afloat, Main Street struggling. It's struggling, and a lot of people don't know that their pensions are underfunded, and it's getting worse. Main Street might not know their pensions are in the markets, and because of low to no yields for so long, money and fund managers moved your pensions into riskier assets, trying to get more yield, and this is a direct result, or maybe even consequence, of having zero to low rates for so long. They need to get yield. They're going to put it in riskier assets. And what did we hear the Fed say a few months back? They're going to go into things like corporate debt, corporate bonds, things like that. So they need to, in some ways, hold up your pensions. That's how severe it's getting already. And a lot of people just don't fully recognize this. So I'll play another clip from Robert Kiyosaki. Our pensions are toast. I hate to say it, but it may be burnt toast at this point. Another clip, Robert Kiyosaki.
So they're covering all of this up. So they want to bring UBI in so they can just mass produce money. And then so they're going to pay people not to work so they can escape. There's a thing called the debt to GDP ratio. So when the thing crashed in 2020 in March, the debt went up and the GDP, the gross domestic product, went down. So that's what I was saying. So we produced less. Debt went up, GDP went down. And if this coronavirus comes back, which I think it will, we're bankrupt. Because the debt to GDP, once debt to GDP passes 90%, we're bankrupt. Today it's 115% debt to GDP in America. So we're already bankrupt. And so the UBI is no different than the Romans paying the Roman citizens to sit in the Colosseum and watch the Dallas Cowboys play the Green Bay Packers. You know, nothing really changes. I mean, people are that stupid, but they don't know. They really don't know.
That's a big part of it. A lot of us really don't know. We've never taken the time to understand, and it's not easy to understand. We're broke. We're bankrupt. In Rome, government brought in bread and circuses to pacify, and I use that word, pacify, the people as to what was really going on. Today we see food relief happening. There's your bread. Though we are also seeing entertainment for the circuses part of bread and circuses. Now, before it was sports. Without sports, though, entertainment has shifted to populist movements, riots, violence. It seems to be entertainment for people in some cases, unfortunately. And this has become the sport for a generation that is literally fed up. This is just to say things are changing, and it will be through revolution or evolution. This change is going to enter or come in through one of those two doors. And I want to put something up here. A question by One Royal Wolf. What will happen to our superannuation funds? Superannuation funds are similar to 401ks in the U.S. Now, with this, you can roll it over, or you can take part of it and put it into things like gold and silver. And this is what we're seeing more and more people doing. If you want to do it, you contact us. We'll help you out and explain it and give you a path for you to go on. So what happens is, right now, your 401k, I'm assuming even superannuation funds, they're doing pretty well because the markets have been doing well, Fed-induced. Here's the thing, though. When those markets go down, you can expect things like 401k, possibly even superannuation funds, where they're going to go down with the market because right now you are into paper. You're in paper assets. But what you can do is transition those paper assets into real hard, physical, liquid assets like gold, like silver. Australia allows it with their superannuation fund. The U.S. allows it with their 401ks. I think even UK, they also allow some form of gold and silver type of a 401k or IRA type of a thing, and as well. Sorry. So the thing is, what you can do is you can take some of your 401ks, superannuation, and you can put it in something like gold and silver. And here's the thing. A lot of times you hear people saying, allocate 10% of your portfolio to gold and silver, or, things like that. And some guys, yes, they can do that. It's not a problem. Some guys, it's out of reach. They feel this is only for rich people. Well, back up a little bit, because your 401ks, that money's already there. It's already there on the side. So it's not like you need to open up your wallet, take out money, and buy gold and silver. No, it's already there for you. So what you need to do is you contact companies, custodians of sorts, and they will help you put some of your 401k superannuation funds into gold and silver. So that way, if anything happens with the paper markets, I don't want to say you're okay, but at least you have some of your retirement in physical gold and silver. It's outside of the financial system. So as markets go down, you're here now. You're in gold and silver. You hopefully are going to be okay because now you're into a real hard asset. And as markets go down, the value of that gold and silver is going to go up. So it's a very, very good hedge. I urge anyone who has superannuation fund or 401k, do look into creating some type of precious metals IRA. I think this is something that's hugely important. It's something people don't really talk about that often. Okay, so I want to move on to another clip from Robert Kiyosaki.
What they're doing is they're propping up zombies. And the zombies are companies that are mismanaged, like Hertz right now is completely bankrupt. Boeing is bankrupt. The cruise ships are bankrupt. Ford's bankrupt. And the Fed, the Treasury, and Wall Street keep propping them up. Well, it makes it harder for your generation. You know, like I always said to the millennials, man, you guys have been screwed. You know, it's a monetary war, which is why I always ask the question, why doesn't school teach us about money? That's not an accident. So that's why, you know, I say to your generation, with that iPhone, become an entrepreneur. You know, so you don't need the job security, nothing wrong with it, but you don't want to need it. And you don't need the UBI, you don't need the paycheck. If you can get off of needing that paycheck, you're free. If you can make your own money. You know, you want to be anti-fragile. You know, the harder it's on you, the stronger you want to get. And as you know, there's a lot of snowflakes out there, and a lot of cream puffs, and a lot of wimps. And it's their right to be a wimp, but they're still wimps. I was watching CNBC. That's another communist organization. But they had this guy named Jim Grant get on there, and he was explaining exactly what I'm saying to you guys. You can't just keep printing this money.
Okay, Polynesian Pip, good night. Thanks for being here. So again, strong words, strong words. The change can come through evolution, a peaceful evolution, and you know this is why we talked about the gig economy last week and how working for multiple employers, things like working for multiple employers, it's a hedge in downturns. Technology like your mobile phone is one tool. It's one tool of a solution for you to succeed. There is hope in all of this, and you are your own hope by understanding what is happening and what you can do. And I'm going to also throw in there by understanding what's going on with the economy, what's going on with central banks, and understanding again wealth protection and more importantly systemic wealth protection. So there's always hope out there, right? We can do things. There's one more clip from Kiyosaki.
And so CNBC asked him, so what should you do? He says, buy gold and buy silver. He says, they're going to destroy the dollar. And the guy, Joe Kernan of CNBC says, that's such an old idea. You know, gold and silver have been here since God created this earth. And Bitcoin is the next replacement to that. So for your generation, it really is to get outside of what mainstream media says is the right way to think, and think for yourselves. People still say to their kids, go to school, work hard, you know, save money, save till it hurts. It's really stupid. And that's because people cannot think, because they went to school to get that job.
Okay, so that was the last clip from Robert. So what stands out is a few things: gold, silver, Bitcoin. And again, this is something that, you know, even we said, it's things we need to understand. As much as we like it or don't like it, it's still something we need to understand. We can't just shut ourselves off to something that can be helpful and useful. We need to understand it. And he also used Gerald Salente's phrase, think for yourself. Absolutely true. And jobs that won't be there. And I told you about that recent report from Yelp where 60% of restaurants, they're not going to reopen. They're going to be gone forever. Jobs are going to get harder and harder to come by, which is why the gig economy will be, in some cases, the only solution for some of us. So, you know, for us older guys, it's a new way we have to understand and we have to think. Technology is going to dictate a lot of what we do, and including even what might be our money. So we got to understand these things, especially crypto. A lot of us gold and silver guys, we may not like crypto, but still we got to understand it. So another thing, you know, the point in all of this, no matter what your financial position, it's time we all understood with an urgency. It's getting very urgent already at this point that we need to move outside of the current monetary financial system. And your insurance, as Robert said, a very wealthy man pointed out, are gold and silver. That should be your first step. Those are the easiest to understand. And then have an understanding of Bitcoin. Again, the thing with Bitcoin is you're looking at the way it can transfer payment, because gold and silver are not that easily transferable. So that's why we look at things like Bitcoin. And on top of that, that is why we look at things like Cash Gold Token or CGT, because it's a combination of crypto and gold, and it's gold that is already there. It's not coming from future production. So one more thing about the Fed, which is really why we're talking about this. One thing that Powell said that we cannot forget.
This is rapacious Fed nonsense that is unchecked in an economy and in a country that works on checks and balances. That's what makes the country work. But the Fed is unchecked and unbalanced. It's a rogue, out of control institution that's ripping a new, gaping black hole in the center of our republic.
Okay, that obviously wasn't Powell. That was Max Kaiser. Of course, he has his own strong opinions on the Fed, but he's also right in that again, as that article pointed out, the Fed is unchecked, and they're doing some very very things that I think are going to have some unintended consequences. But so get back on track here, and I will take you to something that Jerome Powell said that we cannot forget.
Chair Powell is taking the podium. Here he is delivering his press conference after their decision today.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability.
Okay. And that's the Fed dual mandate, which we cannot forget. The dual mandate is maximum employment and price exposure. So let's take a look first at maximum employment. This means a good number of people are working, employed, making money, spending money. Banks are willing to loan. Businesses are growing, hiring people, maybe making big purchases. People are buying things like homes and cars. Velocity of money is great. However, all that money moving around and circulating starts to bring in inflation, and prices become unstable. Enter the Fed's second mandate, price stability. The Fed, in an inflationary environment, raises interest rates to cool off the economy, slow down the velocity of money. Loans become harder to obtain, out of reach for some people. Homes purchased with an adjustable rate mortgage become more expensive. As far as monthly payments, they get a bit higher. Businesses find it difficult to grow, more difficult to buy on credit, may even lay off some employees, some may even shut down, which then, if you have people unemployed, goes back to the Fed's first mandate, which is maximum employment. So you can kind of see how things are throttling back and forth between mandate A, mandate B. They're being throttled. The economy is trying to find a balance between the two. It's going to continue for the rest of our lives, where the Fed is, we got good employment, we're spending money. Oh, hang on, wait a minute, economy is getting too hot. We need to raise interest rates, cool down the economy a bit. It just goes on and on and on. It's an impossibility to have those two mandates where people can actually, the average Joe can actually get ahead. So, yes, it's more complicated than this. I realize that, but you can see how the Fed will forever have to intervene. They will forever have to intervene with this dual mandate. Just as you and I are doing well, if inflation kicks in, the Fed pulls the rug out from under us. Fed intervention is probably the biggest reason why we have a growing wealth gap. And this dual mandate, for most of us, we take a step forward, and every time we do, when the Fed steps in and intervenes, we end up taking 2 steps backward. And this is the trouble with the dual mandate. It contradicts growth. I'm going to say household growth. For a lot of us, it becomes difficult to really, really get ahead. And so here's the truth about the Fed. And this comes from G. Edward Griffin's book, The Creature from Jekyll Island, A Second Look at the Federal Reserve. This is what he says. It's not my words. It's his words. So all credit to G. Edward Griffin. The accepted version of history is that the Federal Reserve was created to stabilize our economy. Since its inception, it has presided over the crashes of 1921 and 1929, the Great Depression of 29 to 39, recessions in 53, 57, 69, 75, and 81, stock market Black Monday, 87, back in 87, and a 1,000% inflation, which has destroyed 90%, or even more than that now, of the dollar's purchasing power. So let us be more specific on that last point. By 1990, the annual income of $10,000 was required to buy what took only $1,000 in 1914. And I didn't even touch on what happened in the dot-com bubble 2008 and what's happening today. The book was written before that. But still, we're seeing it on and on and on and on and on. So that incredible loss in value was quietly transferred to the federal government in the form of hidden taxation. And the Federal Reserve System was the mechanism by which it was accomplished. So he goes on to say, if an institution is incapable, which I just showed you from what he wrote, all these recessions and depressions that have happened since the inception of the Federal Reserve in 1913, if an institution is incapable of achieving its objective, there's no reason to preserve it, unless it can be altered in some way to change its capability. That leads to the question, why is the system incapable of achieving its stated objectives? The painful answer is those were never its true objectives. When one realizes the circumstances under which it was created, when one contemplates the identities of those who authored it, and when one studies its actual performance over the years, it becomes obvious that the system is merely a cartel with a government facade. Cartel with the government facade. And it explains why the Fed can seemingly never work because of this dual mandate. They have to go back and forth, back and forth. And so there you go. The dual mandate of the Fed is impossible. It's failed during its whole existence, and we are seeing it fail again. Only this time the stakes are much higher, ranging from the dollar ceasing to being the world's reserve currency to a global shift of power and influence. Now, here's the thing, though. As the Fed cycles back and forth between Mandate A and Mandate B, the Fed's intervention starts what I call a clock of consequences. Keeping interest rates artificially low, as Powell just said, we're already looking into 2023. Keeping interest rates artificially low, as the Fed has done for nearly 2 decades, causes systemic malinvestment, incentivizes excessive risk-taking, and sustains zombie firms, making society poorer because that money perhaps should have went to an entrepreneur who is giving us solutions to help us. Instead, the Fed is deciding the winners and losers and keeping companies afloat that probably weren't doing the right things. So these are the things that are happening. And it's slowing the seeds or sowing the seeds for the next crisis. In other words, that clock of consequences, each time the Fed intervenes, keeps ticking. It ticks, it keeps on going. And how much time we have left, don't know. Nobody really knows. But it does punish savers and it does punish creditors. So there are, however, powerful constituencies for easy money. America's biggest borrower, the federal government, loves it. Real estate developers and brokers and much of Wall Street also vigorously support cheap debt. And as Lynette Zhang said at pretty much the top of the show, that's where this money goes to. It ends up going to Wall Street. So in summary, with all the Fed is doing with the dollar and throttling the economy to fit mandates, and all the while quickening the clock of consequences, are you prepared? Are you prepared? Do you understand really what's going on and how this global shift, this transfer, is absolutely going to include a wealth transfer? Do we all understand this? And in the wealth transfer, the neutral asset in wealth and storing wealth is gold and silver. That is the money that all the world knows to be gold and silver. And this is why we need to move out from one or the current financial system, try and straddle it and start moving into things that are outside of the current financial system, things that everyone knows to be real money. One final thought from Tavi Costa.
I think that the Federal Reserve right now is painted into a corner in which it has to continue to buy assets to prop up equity markets, and almost has two new mandates to keep valuations of equity markets afloat, and at the same time suppress interest rates to continue to allow companies to borrow at cheap prices and the government to also borrow at cheap prices. It's a dynamic that we're seeing in which is an explosive mix for precious metals in general. It's a supercharged environment for precious metals, in my view. Any alternative for the monetary system, which Bitcoin would be part of that too.
Okay, so there you go. Tavi Costa, I think he also nailed it with what he had to say. So let me take a look at a few more comments and let you guys get some sleep. Let you guys get some sleep and get going throughout your day. Mike Gundy, appreciate it. You the real Mike Gundy, the coach from OU. Oh, I don't know if I've asked you that, but I appreciate you guys more. I mean, thank you for that, but I appreciate you guys more because you folks, again, as I've said before, you folks and your comments are the thing that is going to help people who are sitting on the fence the most. If they see that you understand it, and they see that the comments are in that direction where they, it's helping them make a decision. You guys are the real stars out there. You can help people more than you think, and I appreciate that from all of you guys, because I guarantee you somebody out there was listening, and he's always thought of all this stuff as maybe there's no yield in gold and silver. Why should I get into that? I can make more money in the markets, things like that, and you can't deny that. But the thing is, we have to also bring that other side where, the store of wealth component, not just the price, because a lot of these guys are just looking at the price of gold. They may feel, oh, it's already hit its all-time high, so I shouldn't get into it now. It's already too high. Well, stock markets are all-time highs, every week? So, I mean, that argument is gone. NASDAQ's the same, so you can't keep that argument where, gold has reached its all-time high, so maybe it's too expensive. Well, if you feel like that, silver is out there. Silver is out there, only about halfway to its all-time high. That silver slingshot, I tell you, I think we're all going to be in for a fantastic ride. So again, the comments out there, appreciate it. Journalistics.com, appreciate it. Again, just keep on doing what you guys are doing. Talk to people, let them know what's really going on, your family, your friends, and with an understanding that we're all in this together, with an understanding that let's all try to be a blessing, not a burden. It was nice to see that gentleman earlier in the Twitter feed help out that woman just to even buy diapers. I mean, that's where we need to get to. We need to get back to that point. So again, do your best to be a blessing. It's going to be a lot of burden out there, and as we always say, saddle up for what's coming ahead and silver up as well. Thank you guys all for being here, and take care during the week. Take care.